In today's video, I'm going to share with you how to get the most out of your account with Yieldmax, Cornerstone, and Defiance funds. We're up 14,000 today, as you can see there, and they give us over 300,000 per year in dividends, as you can see below. These funds help us live financially independent from a 9 to 5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. I use these funds and I use some margin to get ahead. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of that purchasing power to get ahead. We're also outperforming with this approach using Yieldmax, Cornerstone, and Defiance, and some margin. We're up 24% for the year, as you can see there, but after today's gains of being up over 1%, then this is going to make us be up over 25% tomorrow. The S&P is up 15, the Nasdaq's up 18, the Dow's up 6, and the Russell's up 7. So we're beating all of the indexes with Yieldmax, Cornerstone, Defiance, and some margin. We're beating all the indexes on a daily basis, as you can see above, 14,000 or 1.3%. If you look above, the Nasdaq was up 1.5, the S&P is up 1%, and the Dow is up 0.32. So I'm going to share with you how I'm getting the most out of my account using these funds starting now. So here in our positions, you can see that Cornerstone was up 0.78 for us today, 0.78, 0.78. They were up the exact same amount. That's kind of unusual. But anyway, that gave us $3,000 worth of gains. Okay, CLM, CRF, 3,000. We made 14,000. So this is just a fraction of our gains today. And Cornerstone, if you're new to this channel, Cornerstone is a 5-star fund. That's why I put 400,000 of my dollars in Cornerstone, and it moves upward, left to right on its chart, as you can see on Morningstar. That's because you have to factor back in its dividends, drips, and rights offerings. Okay, look on a 5-year chart. Look at how it moves in these channels. Okay, you have to time it between the rights offerings. We got 50% premiums here from Cornerstone, where you see my mouse right here. So you get the 20% dividend from Cornerstone. We got 50% premiums in 2021, and you get the special drip at NAV. So if you buy here, then you get the dividend down here, drip down here at the lows for free money every month, and it helps grow your income every month. You just have to play Cornerstone properly at the time between its rights offerings, like I just said, and that's in my Volume 4 e-guide if you need more help with Cornerstone. When you buy my e-guides, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. We have many channels here for your enjoyment, okay? But the biggest feature that we have here at this Discord chat room is the Cornerstone rights offering announcement. We have over 1,000 members in the Discord chat room pursuing the FIRE lifestyle, and we're all on top of this rights offering announcement together, because this is how you really level up your account. You get days gains from Cornerstone, like I just showed you. So we were up 3,000 today from Cornerstone, and if you play it right before the rights offering, you get to pocket all the premiums. So we made almost 1% in premiums today, plus we get the 20% dividends, and you get the special drip. Okay, and you get to pocket all those gains before the rights offering, and then you buy back after the rights offering. That's how we really level up our account, and I rinse and repeat that every time we have a rights offering announcement. So Cornerstone, I put 400,000 in Cornerstone because it is the index, okay, and we're using margin. So we want to use the indexes and dividends with margin, okay, and it's tied to the S&P and Nasdaq, so I don't mind putting 400 grand of my dollars in Cornerstone. I don't want to put 400 grand in Orchid Capital or some real estate fund with a high dividend or some BDC or CLO. I don't even want to put it all in FEPI. Look at FEPI, okay? Look at my gains in FEPI. I have 20,000 in FEPI right here, and I'm down 0.59%. It's been giving me steady dividends every month, but it's 50% maintenance, and look at my gains from Cornerstone. We're up 36%, 17% there, so Cornerstone blows away FEPI in my opinion, and Cornerstone is 30% maintenance, okay? 30% maintenance, CLM, 30%. FEPI is 50% maintenance. So FEPI is not going to really give you the day's gains, okay? It was at 0.18, or actually that's probably the after hours, but look, FEPI is 50% maintenance. That sucks up half of your equity. That's the key to living financially independent from your 9 to 5. You have to have high available withdrawal, and when you have high maintenance, that sucks up your available withdrawal. If you need help understanding maintenance, that's in my Volume 3 e-guide. So FEPI, once again, no total gains and 50% maintenance for only a 17% dividend. So I prefer Cornerstone's 30% maintenance for a 20% dividend that it sets at its NAV every year. So it sets its dividend at 21% every year with 30% maintenance, and it's totally diversified. FEPI is just tech, so you can't really anchor your portfolio to FEPI. And FEPI was up 1.65% today. Not bad. FEPI actually beat the NASDAQ, as you can see above. The NASDAQ was up 1.5. But FEPI generally gives back its gains through its dividends, which is fine. That's all that I want with FEPI. It's a steady cash cow. But I want best of both worlds, dividends and days gains. And I want to keep those days gains. And Cornerstone lets you keep those premiums. It doesn't give them back on the ex-dividend date. It keeps marching higher. And that's the key to living the FIRE lifestyle here. It's not only getting these dividends, but it's getting this correlation to the indexes. Okay, we're at 1.3% again today. You look above, that's beating the indexes. And that's the name of the game with margin. Okay, you see my margin usage down here. I have about 300,000 in margin. Okay, but my dividends of over 300,000 per year will pay back my debt in less than a year. Okay. And then I'll be left with all those dividend paying assets to myself, paying monthly cash flow for life that qualify to banks for loans. Okay, you can't get loans off of trading gains or these days gains even. Okay, I want dividends because that's all the banks will accept to live free from 9 to 5. So they either take pay stubs from a job or dividends. So if I want a house, if I want a car, and I want to live free from 9 to 5, I need my dividends. And that's what these give me, okay? They give me qualifying income to live free from 9 to 5. So I want these dividends, but I also want days gains, and Cornerstone gives you that ability. FEPI doesn't really give you that ability. We also have Defiance funds, okay? QQY and IWMY. They were up nicely for us as well, okay? 1% for QQY and IWMY is 1.35%. And QQY is 30% maintenance. That's why I have so much in QQY. IWMY is 50% maintenance. QQQY is 30% maintenance. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. So Defiance is actually giving us these days gains and correlating us to the indexes. What more could you want from Defiance? Okay, it's almost up as much as the NASDAQ. The NASDAQ was at 1.5. It was at 1.13. It beat the Dow Jones. And on down days, Defiance is down less than the markets. I've documented that in past videos. So we get these days gains, okay, with Defiance, Cornerstone, Yieldmax, even FEPI. And then we fall less than the market on down days. So we can beat the market on up days, fall less on down days. And the reason why that happens is because Cornerstone falls less on down days and Defiance falls less on down days. But the name of the game, and I want y'all to remember this for the video, the name of the game for investing with dividends on margin is staying power, okay? Available withdrawal, and all I want are days gains. So my available withdrawal jumped by $14,000 today. My available withdrawal, 287, again, it jumped by 14,000 because of these days gains. Now, you don't see a huge jump in my available from the last video because I've been selling a lot of options, okay? All these options that I sell down here, they also give us our days gains, okay? BitX, we made over 20,000 in premiums from BitX. I just sell the options on BitX. We get 20,000 in premiums to lower our margin by 20,000. But it also gives you days gains, BitX. It was up 700 today. Now, I don't want to take that $700. Again, I want to just wait till expiration and collect my 20,000 in premiums from BitX. So $50 strike price minus $30 contract. That's $3,000, right? $3,100 right here. So 50 minus 30 for easy math. That's 20 a share. So we're controlling Bitcoin at much lower prices than everyone else. So we keep our risk low when we sell these options. We still control the indexes and major asset classes with these options, and they give us these days gains, okay? And on down days in the market, they fall less than the indexes because they're leaps, they're long-term options. So that's how I also shield my account from downside volatility on down days. But on up days, we get, a couple of extra $1,000 in performance from these options. So that's how I'm engineering these 14,000 in days gains. It's from a combination of Yieldmax, Cornerstone, Defiance, and these options. And then I also buy options for insurance to protect my account. So they were down 50% today. Okay, that's what we want. The market was up huge. They were down 50%. When the market was down big the other day, these options were up 100%. But when the market is up big, then these options will move down. Obviously, that's what happens. So I want these options to lose, but I have $100 in each option, okay? The QQQ and the SPY, because these are married puts. I invest in my index plays, so I keep married puts to hedge against my index plays, so I can withstand over 20% corrections in the market because my available withdrawal is high. But if we were to have over a 20% correction in the market, okay, a 30% correction is where I'd be triggered at a margin call, then my options would absolutely clean up in the event of a market fall. If you need help insuring your portfolio like I do with my put options, that's in my Volume 5 e-guide. Volume 6 is selling options. Volume 5 is hedging and buying my options. That's also where I talk about boxing Cornerstone here. Okay, I box Cornerstone to hedge Cornerstone and also raise my available withdrawal. I've talked about that in past videos. And I also use triple shorts to hedge against my triple longs. And my triple longs were up nicely today. Look at TQQQ up 4%. That's another $500 from TQQQ, for example. So I use a combination of Yieldmax, Cornerstone, and Defiance funds to get these days gains, plus those triple leverage ETFs, plus all the staple stocks that I have in here. If you follow my portfolio on YouTube, you know that I've been pounding the table on staple stocks and small cap stocks. So those were really helping us today. But regardless, I just stay with the indexes and I stay with the sectors that are in the indexes, like staples. That's 7% of the indexes. I'm actually heavier in staples right now because they have nice dividends and they're really cheap and they have low beta and they offset the volatility on down days in my account. We've been outperforming with not only Defiance and Cornerstone on down days, but we've been outperforming with healthcare and staples on down days as well, and they give us nice dividends. So Cornerstone, play that properly between its rights offering. Also watch the maintenance in Yieldmax funds. They're 50% maintenance. YMAG was up 2% today, but it has 50% maintenance. That's why I don't put too much in YMAG. Okay, YMAG, look here, 50% maintenance. Whereas QQQY, again, is 30% maintenance. So make sure you stay in low maintenance names and stay correlated to the indexes. And the name of the game, again, is staying power. So you have to have capital reserves. You have to have equity. When I withdraw out of my E-Trade account, I swipe my E-Trade card and I withdraw from my equity, not my cash. Okay, so my debt is $300,000, which doesn't show up on a credit check to banks. Okay, this is good debt. So that's also why I keep this margin debt on. It's low interest. So I use my E-Trade card to buy things with my margin because it's lower interest than a house, a mortgage or credit card. So I just withdraw from my E-Trade equity whenever I want, and I add to my debt whenever I want because it's low interest. I've negotiated down twice to around 6%. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you get free access to Discord for life, where we alert you of that Cornerstone rights offering announcement, and you get my phone number for life. So I'll help walk you through negotiations or maintenance in your account, whatever you need me to help walk you through. I'm here for you. A lot of people think it can't be possible that he just gives his number out to everybody, but I really love to do this stuff, okay? And most clients are very respectful of my time. Okay, some days I get blown up, that's true, but they only call me 1 to 2 times and then they figure out how to do the strategy. When you use this strategy, you only have to really time Cornerstone around its rights offerings. Other than that, it's a pretty passive strategy. I use Cornerstone. Okay, that gave us some of our day's gains. QQY gave us more of our day's gains. Why do people hate QQY and IWMY? They go up on up days and they go down less in the market on down days. Yes, they erode on their charts, but they give you back the dividend when they have their ex-dividend date drop. So if you see this chart here, it's going sideways to down, and then they're up today on this up day, which is all that I want. I want staying power each day. If each day I'm correlating to the indexes, then I'm not going to fall by much. I'm just going to fall by the amount of the indexes, and I'm going to keep growing my account even with the decay. We're up 14,000 again today. So QQY was a big contributor to our day's gains. And yes, they give back those gains when the dividend is announced and they have the ex-dividend date drop, but you get that back with the dividends and then it pays down your margin. So, and then it grows your account by the equivalent amount. So yes, they give back the gains, Defiance, but in between the ex-dividend dates, you're getting these gains to get you staying power. That way you have high capital reserves, high equity, and this is how you stay away from margin calls. You keep your available for withdrawal high and you stay indexed, okay? Cornerstone is the index, Defiance is the index, Yieldmax is the index, but Yieldmax is not totally diversified and they're basically tech related. So you want to have a smaller amount in Yieldmax, and Yieldmax has the higher maintenance. So be very careful with Yieldmax funds. But I definitely have some Yieldmax. I have about 150 grand of Yieldmax, and then I have all these other closed-end funds as well. So you have to use a blend of Cornerstone, Yieldmax, and Defiance. I put the most in Cornerstone, the second most in Defiance, and then the rest in Yieldmax. Okay, so if you need more help doing what I'm doing, email me for my e-guides at aikentod48@gmail.com. When you buy my e-guides, Discord access is free for life, and my phone number is free for life, so keep that in mind. We're outperforming the markets with our approach, and even with margin, we're down less on down days, and we're beating the market on up days. Okay, so you just have to have a unique blend with these Yieldmax, Cornerstone, and Defiance funds. You saw my allocations there, and then you keep your available withdrawal high in the process. This allows you to pay your bills even in a 20% correction in a market or 30% correction, whatever it is. I can still pay my bills and live free from a 9 to 5. Okay, if you liked the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.